This is the AAA Insights podcast, hosted by AI Insight. Today we'll cover a review of private placements for the month of July 2019. Laura Sexton, Senior Director of Program Management at AI Insight, is joining us to discuss the key findings and some market insights with us.
Welcome to the AAA Insights podcast, a look at the latest trends we're seeing in the alternative investment universe. AI Insight covers over 200 non-traded alternative investment funds representing nearly $35 billion in assets and over 80 alternative strategy mutual funds, representing 80% of the AUM of the alternative strategy mutual fund market.
This is Heather Muckle, Director of Marketing at AI Insight, and today I'm here with Laura Sexton, Senior Director of Program Management at AI Insight, to talk about the new Private Placements Industry Report for the month of July. This report is now available to subscribers on AIinsight.com. We publish 26 reports annually, covering all the key non-traded categories and alternative strategy mutual funds. Laura, let's level set first. How many private placements do we cover overall at AI Insight?
Hi, and thanks, Heather. Yeah, so as of July 31st, AA Insight covers 168 private placements with an aggregate target capital raise of $11.3 billion. Our current coverage includes, among others, 60 1031s structured as DSTs, 9 opportunity zones, 62 non-1031 real estate private placements, 8 energy programs, and 4 private equity or debt programs. So the programs we cover so far have raised an aggregate of about $7.6 billion, or about 67% of their target.
Okay, and how many were added in July?
We added 14 new private placements to our coverage in July. The majority were 1031 exchanges structured as DSTs, which tend to be the majority recently over the last several months.
Okay, can we talk about some of the main trends? So what are you seeing in private placements?
Sure. I think the main trend we're seeing is just this continued focus on real estate or real estate-related programs, and less so on some of the other niche strategies such as energy, preferred securities, private equity, and debt. And actually, I was at the Real Assets Advisor board meeting a couple of weeks ago, and this trend was discussed there as well. So it seems to be kind of across the board, this continued focus on real estate as opposed to some of the other niche strategies out there.
Okay, and can you talk about how 2019 compares to last year? Which categories are above 2018 levels and which are below?
Sure. Well, as I mentioned, the 1031 category continues to expand, and in fact, it's one of the few areas in the private placement world that has expanded, while some of the others have contracted. In 1031s, new fund launches are up about 4% this year. Not a huge number, but they're bigger, so you've seen a 33% increase in the aggregate target raise, while others are actually down in both new fund launches and target offering amounts. We've seen very few energy programs, no preferred programs on the private placement side, and no private equity or debt programs. Another one that's been weak so far this year is the conservation easement category. We've only seen one so far this year, which was actually just launched in July, and we do have one coming soon, but the category is about 70% behind 2018 levels in terms of both fund launches and target raise. There's been a few factors there, including some IRS scrutiny over conservation easements, and then an investigation into EcoVest, which was one of the largest sponsors of easements. And again, at that Real Assets Advisor meeting I was at, there seemed to be a wait-and-see mentality by both the sponsors and broker-dealers on easements, so kind of not surprising that we're seeing a slowing as well.
Okay, and I wanted to comment, I noticed you mentioned Walgreens in the 1031 write-up. Walgreens announced last week that they're planning to close 200 of their stores. What impact does that have on the private placements we cover?
Sure. Well, we always want to kind of keep an eye on the tenants in the funds that we cover. And as you said, we noticed this the other day that Walgreens Boots Alliance, which is the parent company of Walgreens, announced they're going to close about 200 stores in the United States. And it's less than 3% of its 10,000 locations, which they're closing as part of their cost management program. But we just did a quick search on our site, and of the nearly 500 or so DST and TIC programs that we've covered, both open and closed to new investors, approximately 10% of these have exposure to Walgreens retail locations. Within the 1031 exchange category, DSTs, the Walgreens stores are primarily structured as triple net leases, which means Walgreens is required to pay rent regardless of the status of the location, give some coverage and some assurity to those investors, but it might impact the resale value of a property or a portfolio, and especially if there's debt at the property or portfolio level. So for investors, you just want to kind of reach out to your financial advisor, sponsor, and just talk about how they're planning to mitigate any risk. It might not be impacted at all, but it's just something you always want to keep an eye on. And because it is, relatively big, 10% exposure within the DST category, we just want to kind of keep an eye on it. Wanted to mention it and make sure that everyone is aware.
Great, and thank you for sharing those insights, Laura. Listeners, thank you for spending time with us today, and be sure to check out our website, aiinsight.com, for more information on how to subscribe to all of our industry reports and to check out our other tools to help you stay ahead of the alt industries.